Hey, good morning everybody, and welcome to another daily market report brought to you by Mike Bjork. And today's Thursday, September 23rd, and we got a bit of news today. And so let's take a look. We got the initial jobless claims came up a little bit higher, so the stock market was down a little bit, and bonds started up a little bit higher. They were estimated about 455, kind of close to where the prior weeks was 453. But then the other news came in: existing home sales and leading indicators. Existing home sales came in a little bit higher than what they anticipate, so it kind of had an uptick, which is great because before 3.84 million for the month of July was the lowest on record, and then this of course is the second lowest on record. So it's low numbers, but at least it's improvement going to the uptick. Leading indicators, before they're expected maybe around 0.1%. And it actually went up a little bit to 0.3%, which is actual great news for also because it kind of gives us a forecast of what the economy may be doing. So before we were at kind of negative and it went up a little bit, so this could be good news, but something we're definitely going to watch because it was also reported in the euro, as you see down here, sharp decline in the PMI, which is the Purchasers Manufacturing Index, Purchasers Manufacturing Index, I believe it was, concerns the Europeans because they did have a sharp decline. It was about around 53 when they were estimating around 55. Anything above 50 is still expansion, but with that sharp decline from 56 down to 53, if that continues, of course, that could be putting them into recessions. Of course, what happens in Europe, this being a global economy, this could kind of react towards the U.S. here, so that could adversely affect us. Because the leading indicators and the existing home sale numbers came up, that kind of offset some of the initial jobless claims for the stock market. So the stock market's up a little bit. Ireland came up again. There's concerns that potentially some Anglo banks, I think it was, that may not be bondholders that may not receive any of their money in the future. So that's coming up again. So as a bonds, as we can see here, it started up about 15 basis points where we let off yesterday. Yesterday we had a decline for the day, and right now we're down about 15 basis points. So we're kind of about where we finished the day after yesterday. So as we were seeing right now, a trend here, we're about kind of going a sideways action. Tomorrow the durable goods will be out, and so that will probably be kind of bigger indicator as to what might be happening for the week here. But as we said, we're still above the trend line, or the downward trend line here. We got the 10-day moving average, 100-day moving average is moving up. So we do got some room to potentially go down a little bit further, but we're kind of still trading within this range here. Let's take a look. I also want to kind of show you, touch base on that leading indicators as to why that could be kind of important to look at. I pulled this off of briefing.com. I thought it was pretty good. As we can see here, the blue line here, as the leading indicators, economy is doing pretty good, but as soon as you can see it kind of coming down, within a few months we're actually hitting a recessionary period. See how it kind of starts going up, and then also we're out of the recessionary period, and then here as we start going down, and a few months later we're in a full-blown recession here. So this is why this is kind of important to take a look at, why the Fed looks at it to kind of forecast where we need to go. And that was some of the comments that were made 2 days ago when the Fed did their announcement on Tuesday regards to they're going to implement quantitative easing if we don't see any improvement in the economy sometime soon. So you guys have a great day, and hopefully everything works out well, and we'll see you tomorrow.